Hi everyone, welcome to the Warrior series of BFM. As you know, in Warrior series we are covering case studies plus MCQs. MCQs are related to the theory, numericals, objective questions. Similarly, case studies are numerical as well as theory based. Plus certain explanations also. Theory is behind this. So follow the video till the end. Share it with your friends, like the video, subscribe to the channel. And one more point, share it with your friends because that's very important. Okay, follow all the mentors, all the subjects. I am covering BFM, ABM, others are covering other subjects as well. So let's move on. Today I'll be dealing with LC flow, letter of credit flow. Very important flow. It is a must for knowing, means every banker who's in banking or giving CIIB, anything. It's a must for that person, okay, to know how does the LC actually moves. So let's start. First, have a look at it. Kindly note, whenever you deal with LC, letter of credit, you are actually dealing with three flows. Three flows. Which are the three flows? Say this. One is LC flow. Second is documents flow, docs. And third is money flow. Okay? You are dealing with LC flow, then documents flow, and then money flow. Remember, these are the only three flows. These are the movement. Flow means what? Movement. Movement of one to another. So LC moves, documents move, and then money moves. And sequence is also the same. Sequence will also be and not be changed. The whole thing is covered under UCP 600. UCP DC we call it. Uniform Customs and Practices for Documentary Credit. UCP DC. 600 is the latest version. Okay. All of these are governed under UCP 600. Got it? And ISBP. ISBP means International Standard Banking Practices. But main is UCP. ISBP is based on UCP. Okay. UCP is the base. And ISBP is based on UCP. It is a supporting document to UCP. So these two documents are the main ones, okay, on which your whole LC process works. Now, let's start with first flow, LC flow. What happens in LC flow? Firstly, understand what is LC, letter of credit. Letter of credit comes in picture when the buyer and seller don't know each other. When the buyer and seller don't know each other. Okay. So what happens in this? There is a buyer over here, let's say in USA. There is a seller over here, let's say in Bharat. Okay. So they don't know each other, but they want to do business with each other. Business is to be done because this guy is exporting by Indian person and this USA guy is importing. So how will they deal with each other? For dealing with each other, what will they do is, first, they'll contact each other through email, through phone, anything. And then they'll exchange their discussion first. What are you going to sell? What am I going to purchase? What will be the rate? How is this documented? This documentation happens through this part. See, this buyer will give the purchase order. Purchase order to the exporter. Let's see, I want this. These 10 items. Okay. Then what will happen? This seller or the exporter. See, there are three names. Exporter, seller and beneficiary. Three names for this person, three names for this person. Importer's names are importer, buyer and applicant. Okay. So, what is this applicant and what is this beneficiary? That I'll explain. Buyer, exporter, buyer, importer, seller, exporter. That much you understand? Simple. Exporter means the one who exports or seller. Reverse is the case over there, vice versa. So, they'll exchange this. First, he will give the purchase order. Buyer will give the PO. Based on this PO, this seller will give the quotation. Right? This is my rate. So this quotation is called as pro forma invoice. Pro forma, or you call it provisional invoice. Two names are there. Pro forma invoice or provisional invoice or quotation. Any of these three names can move on. Generally in international trade, we follow the name of pro forma invoice. 99% we follow pro forma invoice. Somewhere it's provisional invoice, somewhere it's quotation. So now understand, this buyer is having two documents. What? Which one? One, his purchase order, which he has given to the seller. Second, the pro forma invoice received from the seller or exporter. With these two documents, this buyer will go to his bank. This bank is called as issuing bank. Purchase order plus pro forma invoice. With these two documents, this buyer will go to his bank. This bank is called as issuing bank. Now, why is this called as issuing bank? Because look at this. The reason is this bank is going to issue the LC, letter of credit. Now, firstly, understand what is LC. Letter of credit is a bank-to-bank document. Bank to bank. Why is this document there? See, the main reason I'll tell you. The seller does not trust the buyer because he doesn't know, he or she doesn't know that buyer. Okay? So seller does not trust the buyer, whether the buyer will pay or not later. That is the main problem. Second, buyer also does not trust the seller, whether the seller will send the quality goods or not. It may happen seller may sell the inferior goods. It can happen. So in this case, both of them don't trust each other. For that, what happens? They prepare a document from this bank. Now this bank, issuing bank, it prepares a document stating some 10 conditions, 5-10 conditions. I want the goods of this quality tested from this lab. See, whatever you want, you have to put it in document over there. You just can't say, I want good quality goods or I want the best quality goods. What is best quality? Best quality for you might be worst quality for me. So if I want some XYZ quality, I must mention, I want the quality of A plus tested by the lab named so and so at the place so and so. I'll mention it that way. So now what happens? It is very particular. You can't give a vague answers or vague things. Okay? The documents should be sent by the best courier, A1 courier, best quality courier. What is this? Best quality for me may not be, maybe the worst quality for you. Depends. So this issuing bank will prepare an LC, letter of credit. This LC will state all the terms and conditions, all of them. Whatever is required in details, every line. Nothing is vague. This LC now, once it is prepared, now what does this mean? It means that this issuing bank is giving the guarantee of payment. Now the buyer is not concerned with it. This issuing bank is giving the guarantee of payment. Means this issuing bank is telling this seller, this person, that if you send me the goods, if you send me the documents, not goods, if you send me the documents as per my conditions, I will pay you. Forget this buyer. I will pay you. Okay? Forget the buyer. So now what happens? This beneficiary or the seller can trust the bank because bank is a big institution. So this seller or exporter will trust this bank and this document. But now the problem is, how will this document reach? See, this bank is in USA. This person is somewhere in, let's say, West Bengal or Mizoram, somewhere over there. Some district place, some village place. How will it reach there? Because this foreign bank, let's say Citibank. Citibank can't have a branch in Mizoram or any village. So what will it do? It has to send a document. Ultimate aim is what? This issuing bank has to send a document to this beneficiary, seller. So what happens over here? This issuing bank appoints an agent in the country of the exporter. In the country of the exporter, or most probably, if possible, in the city of that exporter. Okay. So which will this agent bank be? That bank is called as advising bank. What is the role of this bank? The role of this bank is simple. Issuing bank will send the LC via SWIFT, either SWIFT or any other means now. Now SWIFT is also means they are planning to remove SWIFT in some period, some months. Okay. So if the SWIFT is removed, we will be having some other technology. ISO they are planning, ISO. So whatever it may be, whichever technology. See, this LC will, this issuing bank will send it via SWIFT presently to this advising bank. What is the role of this advising bank? The role of this advising bank is twofold. Two. What are the roles? It checks the authenticity of the LC. Authenticity. Now what do you mean by authenticity? Whether this LC is fake or true. It can happen. In international trade, there are lots and lots of transactions which appear fake. So, check the authenticity of the LC, number one. And number two, forward all the pages, complete document till the end of the document message. See, whenever you receive any SWIFT or any technological document through technological means, there is always a line called as end of the document. You see, in your old movies, if you see those military movies, there the bosses used to speak. The senior speaks to the junior, or junior speaks to the senior. Sir, we are going ahead to for attacking the enemy. Over. He says over at the end, right? Why over is said at the end? So the next person can understand that the message is over. Again, over, every time it's there. Same thing over here. End of the message. There is a line called as end of the message. Beyond this, there is no message. So up to that point, this issuing bank and this advising bank will take the printout of this document. It is received through technology SWIFT. It will take the printout and it will then courier it to the seller. Courier, post, anything. Okay. Send it physically to the exporter. This bank will take advising charges for this. Now, what is advising charges? Kindly note, advising charges over here means advising. Courier charges, simple, because it has taken some efforts, printing it, checking the authenticity, checking the completeness of the document. It has taken the efforts. So these efforts need money. Nobody works for free. So this bank will collect advising charges from this seller. It will give the document and collects advising charges. Now the question over here is, if the advising charges are not paid, let's say they are not paid, okay? They are not paid by the seller. Suppose if this seller says, exporter says, I don't want a LC, give it back. So now what will happen? If this seller does not pay, then this bank is in trouble because it has taken all the efforts. What about the commission of this bank or charges of this bank? So these charges are to the account of the issuing bank. These charges are to the account of the issuing bank. If this guy doesn't pay, the advising bank will collect the charges from the issuing bank. Okay? Got this point? Now I will clarify regarding this revocable LC and irrevocable LC, because these are also two important questions which come to you. Okay? Revocable versus irrevocable LC. Okay? So what is revocable? Revocable versus irrevocable. What is revocable versus irrevocable LC? Very important term. Under UCP, only irrevocable LCs are defined. Revocable LCs are not defined under UCP. Only irrevocable LCs are defined. Now what do you mean by this? Irrevocable and revocable. Let's take simple example. What happens? This issuing bank issues the LC. Now pay attention. Issuing bank issues the LC. It has issued the LC. LC is issued to this person through SWIFT. It has reached this person, this advising bank. From here it has reached the seller, exporter. Now what happens? This exporter has received the LC, physical LC, authentic document, physical document it has received. Now this seller is confident that I will get the payment. So what will happen? This seller will start manufacturing the goods. This seller will start manufacturing the goods. Obviously, suppose if I tell you, let's take one example. I'll give you some order that you prepare 1,000 white chairs, plastic chairs, and give me. So when will you be confident? When will you start the production? You will start the production only if you are confident of the payment from my side. If you know that I am not paying, I am a regular offender, or I don't pay the payments, you will not make any, you won't make any this production as such. You will say, leave it. First give me the surety of payment, then only I will make the, start the production. Same thing happens over here. This exporter says, I don't trust any of this buyer. Once he receives this LC, then the exporter says, yes, now I am confident that the bank will pay. So now he will start production. This exporter, he or she, he'll start the production over here. Okay. Now let's say the same order is received, 1,000 white chairs. Imagine 1,000 white chairs with the logo of this buyer. 1,000 white chairs with the logo of the buyer. Okay, the order is received. Now this person starts manufacturing the chairs. Some 1,000 order is there. Now what happens? By some 800 chairs are prepared. Imagine 800 chairs are prepared. Complete. They are in the factory. Now they are to be sent. Now what happens? In the meantime, this issuing bank sends another SWIFT. Kindly note, another SWIFT. That see, this LC is cancelled now. This buyer does not want these chairs. This buyer doesn't want these chairs. LC is cancelled. You keep the goods at your place only. You have not given the goods to me, so I won't give you any money. Means you have not sent the documents to me, you have not sent the goods to the buyer, so we won't be giving you any money. The transaction stands cancelled. Imagine these 800 chairs prepared by this person with the logo of that buyer. What will he do? Nobody else will buy these chairs because everyone wants their own logo. What will this seller do? These chairs are a dead investment for him. Loss. So in this case, what happens? This LC can be cancelled anytime. Okay, by the issuing bank, anytime, without consulting anyone. Has it asked anyone? No. It feels we have to cancel the order, so cancel the order. This LC is called as revocable LC. This LC is called as revocable LC. Okay, revocable. Now what is irrevocable then? Irrevocable LC means, see, if this issuing bank wants to cancel this LC, it has to take the consent of the beneficiary, main beneficiary, and all the parties, other parties also, advising bank, if there is any, or if they have a stake in this. See, anyone who has a stake in this, suppose if this LC is cancelled, who will pay the advising bank charges if this person is not paid? So all these things have to be taken in consideration. So this issuing bank cannot cancel the LC without the consent of any of the parties, means all the parties. All the parties need to give the consent that, see, yes, you can cancel the LC now. This advising bank will give the consent only when it has received its advising charges. This beneficiary will give the consent only when his losses are recovered. Otherwise, the LC cannot be cancelled. That LC is called as irrevocable LC. Irrevocable LC. Kindly note, irrevocable LC means what now? Irrevocable LC means the LC which cannot be cancelled without the consent of all the parties involved. Okay? So this is how the LC flow works. Right now the LC is with the exporter, beneficiary. Okay? Done? Understood everyone? Tomorrow I'll be taking the next part, that is documents flow. Because in details you have to understand documents flow is very important. Okay? There are various banks involved in it. I'll be taking that tomorrow. So, don't miss tomorrow's lecture also and share this with your friends. Before going, everyone, kindly note, the new batches of Adda 24/7 have just started. Join them ASAP. Okay? Join them ASAP. The new batch for CAIIB, okay? The new batch for CAIIB is just in the this process of starting, ACE batch. E-books, mock tests, online live classes, recorded sessions, all the points are covered. Mock tests are chapter wise as well as full length. E-books, they include everything, all the topics are covered. And what are the discounts? See, online classes as well as recorded ones, both. So if you miss out any online live class, you can go for the recorded. What are the discounts? Look at this. Put the code Y432. Y432. 80% discount you are getting plus 1% extra through the app. For that you have to download the app and then purchase. So 81% you will be getting. One more offer I'll show you. The best offer for you is the Increment Mahapack. CAIIB Increment Mahapack. Say this. Right now you are getting triple validity. Triple validity means you buy for 5 months, you get it for 15 months. 5 months, 15 months. You pay for only 5 months, you are getting it for 15 months. You buy for 9 months, you get it for 27 months. Triple validity. Plus 81% discount. That is obviously there. And in Mahapack, what do you get? This Increment Mahapack, what do you get? You get mainly, remember, important part. What you get is physical books, physical question bank of all the subjects. Question bank, live question bank, which are asked in the exams. Physical, plus e-books also, e-question bank also. You get formula bank for all the subjects. Formula bank, all the subjects. Very important. You know the importance of formula now, right? Then you get the study planner. Plus 15 plus batches per subject. ABM, BFM, ABFM, BRBL. 15 plus batches per subject. Imagine that many times revision you can have. But for that, never forget the code. The code is Y432. Y432. Okay? See this, 81% discount plus triple validity plus 15 plus batches plus physical books plus e-books. Everything is plus plus. Join ASAP.